Valuation Masterclass Bootcamp students. Roman is going to present that. So without further ado, I'm going to bring Roman up right now. Hold on. Let me bring you up. Roman, how are you doing?
I'm doing great. Thank you so much.
And you're looking good.
Oh, thank you. I appreciate it.
Yeah. So just make sure you're up close as you can be to the microphone and, you know, bring all your energy. So I'm going to share your screen and I'm going to share your screen in a second. And when I do, what I'm going to do is I'm going to exit the room now and let you take over. So you just take it away. You want to go up and down just to make sure that it works?
Yes.
Okay. So I'm going to exit now. As soon as I exit, then you start now.
Sure. Welcome, everyone. My name is Roman Leader, and I'm a student in the Valuation A Start. And I would like to thank all my teammates and the whole group and support to NVIDIA. An over-optimistic CEO causes a market stir that won't last. I initiate coverage on NVIDIA with a recommendation based on a target price of $790, implying a downside of 20. I derive my target price from a free cash flow to the firm-based valuation using a WACC of 10% and a terminal growth rate of 5%. Some of the highlights are NVIDIA's massive revenue growth is expected to normalize. Key partnerships would help to keep revenue growth momentum. That's around would challenge the CEO's over-optimistic outlook. And one of these to NVIDIA is sales dependency, 60% on a handful of hyperscalers turning into competitors. NVIDIA's massive revenue growth is expected to normalize. D.A. Davidson and NVIDIA's sustainability of revenue growth is overly optimistic, mainly due to three factors. Firstly, there is reduced growth due to competition from Huawei, as NVIDIA only produces lower quality in the Chinese market due to US export controls. Secondly, NVIDIA, Microsoft, Meta, Google, and Amazon, which are hyperscalers, start making their I see as a big threat, as it gets 60% of its revenue from those companies, which is around $12 billion. Also, direct competition from Intel and AMD is on the way. Thirdly, in 2020, NVIDIA created a which accounts for a significant portion, 6% of revenue growth in the GPU segment. Key partnership would help to keep the revenue growth momentum. NVIDIA aims to work with industry leaders such as Dell to transform their data center applications and ultimately reach world markets for increased sales growth. NVIDIA would continue to take market share from its competitor AMD, given that it reduced its 24 to 12 months. Some threats around would challenge the CEO's over-optimistic outlook. The CEO might be over-optimistic. The company might estimate customer demand to sales and lead to inventory write-downs, like what happened in 2023. Some background on the company. NVIDIA was founded in 1993, is headquartered in California, and is engaged in the engineering of data centers, process developments of graphic units, professional visualization, automotive markets, and system on chips units, mainly for gamers. Data centers is the company's main revenue driver, and the US is the company's main market. I will now move on to the industry analysis. The IT industry comprises three primary segments: software and IT services, hardware, and semiconductors. Software and IT services is the largest segment, valued at $1 trillion with a 10% growth rate, accounting for 54% of the industry's revenue, with major players like Oracle, Microsoft, and Google. The IT, some of the developments are bargaining power and thriving IPO markets. The industry is experiencing substantial growth driven by advancement in cloud computing, AI, and machine learning. The 10-fold increase in 5G speed and the 40-fold reduction in latency compared to 4G are major factors fueling cloud computing expansion. Some of the risk and upcoming regulatory environment is becoming more complex, with major companies like Apple and Google facing antitrust lawsuits. In the financial year of 2024, in the fourth quarter, NVIDIA experienced astronomical revenue growth quarter on quarter and 265% year on year. The company saw a 338% year-on-year increase in gross profit and a 826% year-on-year increase in EBIT. I'll now discuss the consensus estimates. Nearly 60% of analysts covering showing no deviation trailing 3 months. Revenue growth is expected to normalize in 2027 due to increased competition, ability of lower cost chips. No sell recommendations were issued for NVIDIA. The largest institutional investors, Vanguard and BlackRock, have steadily increased their which account for 5 to 8%. I'll now discuss the known as a GPU graphics processing unit company. With the surge in AI and data centers, the firm experienced a 10-year CAGR of 34%. The firm has 4 main segments. NVIDIA's main revenue driver is the data center segment, which accounts for $47.5 billion US, accounting to 78% of sales. Data center enjoyed of 217%. The firm is now a full-stack computing infrastructure company with data center scale offering. I will now discuss the ACE4 element. Overall, NVIDIA's overall ranking is excellent among the 1,830 non-financial companies in the US. Fundamentals and momentum rankings. In the fundamental rankings, NVIDIA is ranked in the top 10%. A major improvement in EBIT margin, achieving 55% in the past 12 months, compared to 22% in January 2023. ROA and ROE have tripled in the past 12 months. Only FISA ranks higher with a higher EBIT margin of 64%. The risk are the high historical and PTM beta at 2.7 leads to a worse rating, ranking in the bottom 90% in the risk assessment. I will now move to the world-class benchmarking. The profitable growth consistently ranked in the top 10, 630 large worldwide. Profit in a steadily maintaining a 1 position from 2020 until the past 12 months. NVIDIA has shown a volatile revenue growth ranking in the past 12 months. The rank increased to number 1 from 8. Expense direction has caught up with 2022 levels, returning to number 1 in the past 12 months. This is NVIDIA's profit and loss statement. As I said in the main stories, revenue growth has been massive. It's been consistently growing, but the future thing grows for the growth eventually to normalize. NVIDIA experiences strong cash and short-term investments. They have a strong balance sheet because they're highly profitable. The book value per share is expected to increase in 2020. The company is expecting dividends paid in the future as profitable growth opportunities might decline in the future. As I said, NVIDIA has a good balance sheet, and the current rate has been increasing. They have stable gross profit. And regarding the strong cash flow, and it's just a healthy, stable company. I'll now valuation with 2025 expected price to book to ROE forward multiple of looks to be slightly more expensive compared to the infotech sector in the US. This premium is evident because appearances above average and is able to maintain its competitive position in the semiconductor during the discrete period. Based on the forward 2025 expected PE multiple of 45, NVIDIA trades at a significant premium to the infotech sector in the US, Asia, ex-Japan, and the world. Thus, NVIDIA can be presumed to be expensive compared to comps such as Intel, AMD, and Marvel on a PE basis. Also, NVIDIA's forward PE for 2026 is compared to the US for 26.5. Forward PE to growth ratio of 0.7. NVIDIA appears to be cheap compared to the US PE to growth ratio of 1.8. The valuation and the target price, basically I assume a risk-free rate of and the market premium 0.5%. The structure 13 to total capital as the firm leverages a strong credit, which is an A- credit-like rating by the S&P, by the Standard & Poor's, because they have a healthy balance sheet. Scenario, sales growth of around 38% until 2029, leading to a value of $790 per share based on the free cash flow to the firm methodology. This represents a 26% downside compared to the current market price of $1,064. In my sensitivity page, the optimistic case assumes a sales growth of 42% until 2028, resulting in a target price of $885. Conversely, optimistic case, sales growth is assumed to be 34%, yielding a value of $707 per share. I will now discuss the main high 60% are made or developing their own chips. NVIDIA does not sell directly to its customers and its system in the original device manufacturers, Supermicro, and according to major customers aim to shift the NVIDIA. A University of California study states that the next catalyst and untapped market for native AI capabilities the forecasted market $106 trillion by 2020. Apple leads by designing its own phones AI chips models, and Samsung follows suit. An over-optimistic CEO, we are still in the early days of AI. Require increased power at early stages. Less computing power will demand for AI could slow down. However, machines are fully trained and machines have learned from mistakes. Therefore, weakness in data center demand is likely to hurt NVIDIA. Accounts for 78% of sales. NVIDIA's desktop gaming segment also experienced seasonality, usually seeing stronger revenue during Q3 and Q4 of their fiscal year. D.E. Davidson & Co. states that NVIDIA is set to follow the same boom and bust cycle growth as Cisco Systems during the dot-com market crash of 2001. Geopolitical tensions and imposed U.S. government restrictions are likely to hamper Huawei NVIDIA in China and its positions to penetrate the market is set to become the dominant player with government support. NVIDIA only produces low-quality AI chips for the Chinese market due to U.S. export controls, which were imposed in October 2023. Reliance on concentrated, undiversified supply chains and outsourced production in Asia. TSMC and Samsung Electronics are the main foundries used by NVIDIA to produce semiconductor wafers. SK, Hynix Inc., Micron Technology, and Samsung are also the main memory suppliers. The firm also pays premiums for most raw materials and outsources these tasks to subcontractors. All in all, NVIDIA only designs chips but doesn't produce any semiconductors. NVIDIA's strategy is to avoid risk associated with operating and owning semiconductor foundries. So I like the recommend and a target price of $790. Thank you so much, everybody.
Well done. Well done. All right. Oh man, just look at that price movement. I think to me, that's the number one thing that that is the question. And I just want to ask kind of an off the wall question, but what's the possibility that we're all wrong and this stock completely collapses? You just showed a great chart of Cisco. I remember when Cisco was the best and the CEO, John Chambers of Cisco, could do no wrong. And he was nailing it. But go back one slide and let's look at that chart for a second.
Well, I remember managers in the past that fired IBM. So the same, so much for the and there's a big AI hype. Everybody optimistic. But if you watch some of the fund managers, not on the East Coast, but in the Midwest, or like, for example, in places like Minnesota, Montana, people that are away from Wall Street, they started taking their profits and selling the stock. People that bought the stock 2014 for $5 are taking profits and just letting it go.
Okay, we've got some questions. Let's get into those questions. So I'm going to keep your screen up for right now. So if you want to, if you got someplace you want to go in the report to answer the question,
Okay,
feel free
sure.
to do that.
Thank
You don't have to do that. So Grace says, given that NVIDIA recently became the most valuable semiconductor company, what are the key reasons behind the recommendation to sell? Come on, everybody's buying.
I know, Grace. Everybody's optimistic. NVIDIA is a great company, but competition is on the way, particularly from AMD, Intel, and don't forget, NVIDIA is still a cyclical company. Roadmap until 2027, but don't forget, this is a cyclical industry, and the competition from AMD, they have a good product line as well at a cheaper price. everybody has like a mobile phone. They have either like an Apple or like an Android, like it's like device. Basically, NVIDIA should be invited by Apple, but Apple is doing their own thing. Same for like Samsung. And there's, for example, let's say that like Nintendo Switch, like there's no new handheld being built in the gaming like this like sector. So basically, if NVIDIA is able to dominate AI market for like handhelds, this growth can like continue. Amazon, they're not going to order like data centers. Can I give an example? CEO of Tesla, Elon Musk, canceled an order for the Blackwell servers because he said, I don't have space behind this. Tesla is in Texas. They say like, hold up, we don't have space. If you really want to like a data center, you should like create.
All right. We got another question. So Anuratia says, the semiconductor industry has faced significant supply chain disruptions. How is NVIDIA managing these challenges, and what measures are in place to mitigate future risks?
Very great question. In the Form 10K, NVIDIA highlights that in the future, it will start prepaying their because TSMC is trying to increase production capacity, but TSMC is also producing for Intel and AMD. But the key thing is the raw material. So to gain access to stable raw material supply, NVIDIA will start using the great balance to they're like subcontractors to source all this.
Okay, and the last question is from Superwan. She says, in your second story, you mentioned NVIDIA aims to work with industry leaders such as Dell. Does that mean that they're not partners yet? How confident are you that NVIDIA would double digit its revenue growth from this partnership?
Basically, on a Bloomberg News forecast, NVIDIA was like like with Michael and the CEO of her company, and basically what's because NVIDIA doesn't sell directly to its like customers. They use companies like Dell and Supermicro to build together, like especially for the servers. They might gain some. It will take time for that extra production to come like online because basically there's like a backlog, and the CEO is very like optimistic by like slashing lead time from 24 months to like 12 months. But these AI factories still have to be built in East Asia. So by the time it might come online, they might not need them. That's the only risk. But Michael Dell is very good at selling everything to the world. So NVIDIA would like to tap into that like network from Michael Dell, especially selling to.
Great. How does it feel to graduate from the Valuation Masterclass Bootcamp?
Fantastic. I made some lifetime friends, and I had great support from everybody, even the teammates, Tanmai, Mena, everybody. Everybody was like wonderful. And what I really learned is like, give up, honestly. You got to push through.
Yeah, that's a great lesson. And let me ask you, the next question is, what was the transformation that you went through?
Oh, this is the first research report I made. So I feel like accomplished. Like I learned so much how to filter like information. Like she made a very good like comment as in you get so much information, but it's good to filter it down. What is useful? What like should you include? What shouldn't you include?
Yeah. So how did you find out about the Valuation Masterclass Bootcamp, and why did you decide to join?
I found out through the CFA Society from Baltimore. I went to an annual forecast dinner in 2023, and I was talking to a fund manager from like Invesco. He was like complaining about like, oh, they have the easy route and all that stuff. He said, I need someone who comes in and knows like what to do from the start. He said there should be a boot camp. And then I went and Googled like equity analyst boot camp, and then I found you.
That's amazing. That is amazing. Well, I want to congratulate you on great work. Now it's time to relax. It's 6 weeks of intense study and preparation, but really, really was worth it. So I enjoyed it, and I know the viewers and the listeners enjoyed it. So now it's time to relax a little bit, and we've got our next one coming up.
Thank you. Thank you so much.
Yep. Well, that was interesting. And I thought that was, NVIDIA is like the one that everybody's trying to think about. And I at the end of that presentation and that research, I felt like, yeah, there's a huge risk with NVIDIA now. So it's time for our next presenter. This is Hamid, and he's going to be presenting on AMD. And this is going to be interesting because it's kind of the flip side of NVIDIA. We did hear from Roman that AMD could be a threat to NVIDIA, and it's going to be interesting to hear what Hamid has to say. So let's listen to Hamid's final presentation on NVIDIA that he's done throughout the Valuation Masterclass Bootcamp. So let me bring Hamid up here. Hamid, how are you doing? Looking good.
Doing well. Thank you very much. Thank you.
Good colors, good colors. Blue is always good. Neutral looks good on camera. So how you feel? Did you listen to the NVIDIA report presentation?
I did. I
What'd
was
you think of that?
smiling as I was hearing one side, and then I'm coming in with my other side. So yes,
I thought of you as soon as he mentioned about AMD could be a threat, and I thought, well, we're going to get an answer to that.
We're going to get an answer.
Yeah. And it's been great watching your progression, in the report. And so
Thank you.
we had a fun call over the last couple of days to go through details and stuff. So really excited to see. I know you've devoted a lot to it. So I'm going to bring up the report now and just get us set up for a second.
Okay.
All right. And I think you are ready. So what I'm going to do is I'm going to bring us down to the bottom of the screen so we can maximize the report so people can read it. And then I'm going to exit and let you take it away. Are you ready?
I'm ready. Thank you.
Here I go. I'm out of here. Take it away.
All right. Thank you. Hello, everyone. My name is Hamid Ajazafar. I'm going to talk about AMD. So I initiated coverage on AMD with a sell recommendation based on a target price of $110 US. This implies a downside of 34%. I derived the price from a free cash flow to the firm-based valuation using a weighted cost of 10.5% at a terminal growth rate of 4%. We'll talk about some highlights where AMD has some good news in terms of opportunity, massive for AI, but there is some bad news in terms of AMD having its hands tied, as well as some more bad news in terms of its weak commercial focus. There are some risks. AMD is a smaller player. There are some disruption risks based on their heavy third-party reliance. And then, of course, there are geopolitical, economic, and supply chain risks. All right, so AMD was founded in 1969. In 1982, AMD entered a licensing agreement with Intel to produce processors. To meet the demand in a fast-growing, high-performance and adaptive computing market, AMD spun off its production line in 2017 to focus on chip design. Last year, AMD recorded $22 billion in revenues, with significant growth in its data center and embedded segments. The client and gaming segments remained competitive. AMD has chips in Tesla models, in the NASA Mars Perseverance Land Rover, 5G cell towers, and the world's fastest computer. It does contribute to software development, open source projects, and the artificial intelligence evolution. So good news, AMD expanded its portfolio through acquisitions and partnerships, targeting a high growth, high performance, and adaptive computing market as the AI ecosystem grows. Precedence Research predicts data center revenues to triple from $7 billion to $24 billion over the next decade. And AMD CEO says to expect $4 billion from AI chips in 2024. Other industries, including automotive, defense and space, bioengineering, renewables, are also investing in AI. Future Market Insights estimates 55% CAGR in automotive, growing from $9 billion in 2023 to over $750 billion over the next decade. Grand View Research estimates 36% CAGR in medicine, a strong growth estimate stemming from AI's ability to solve all protein folding solutions in late 2020, a feat once thought to take decades to complete. So the success of AI will lead to better drugs. Bad news, post-acquisitions, I expected to see evidence of flowing goods, but AMD's inventory has significantly grown the last 4 years and spiked by 93% in 2022. This raises concerns on obsolescence in a fast-moving chip industry, not shortages. And AMD reports mixed sales and elevated inventories with adjustments on prices, impairments, and losses, reducing returns on invested capital to near 7%, which is below its higher cost environment. While growth is expected in data center and PCs, gaming faces declining console sales with no new PlayStation consoles until 2027. More bad news, AMD heavily relies on its customers to forecast demand, but Microsoft continues to introduce product lines featuring AMD's competitors, and Sony is silent. Earlier this year, Gartner predicted 19% annual growth for the next 6 years from global AI software adoption, but AMD continues to focus on PCs and gaming rather than the broader opportunity landscape. Risk is also imposed on Swift customer sales, and banks are reporting rising consumer and debt and delinquencies. Given these factors, I project a conservative 10% annual revenue growth for AMD for the next 4 years, notably below industry average. If we just take a look at the broader sector, information technology is integrated within everything. In January 2024, the business research company estimated the market cap for IT to $9 trillion by year end. And then by mid-2024, stockanalysis.com is reporting $20 trillion cap with $3 trillion in revenues. IT serves all sectors, providing services, hardware, software, and telecommunications to large and small firms, enterprises, and governments all across the world. IT service globalization, digital transformation, cybersecurity innovations, and e-commerce evolution have driven recent results with $3 trillion players like Microsoft, Apple, and NVIDIA leading in market cap. Despite these recent challenges to supply chains, IT has remained resilient as it continues to expand its universe to cloud, IoT, and the artificial intelligence evolution. May 2024 report from Markets and Markets estimates a near 5-fold increase in AI market size from $200 billion to over $1 trillion by 2030 at a CAGR of over 30%. AI's growth will be driven by advancements in computational power and data availability to support model training and inferencing, leading to improvements in AI algorithms, a precursor to making computers smarter. These solutions will enhance efficiency, decision-making, and customer experiences in all sectors and industries, leading the world in its second digital transformation. The Semiconductor Industry Association also projects global semiconductor market size to reach over $1 trillion. And that's within the decade at a CAGR of 7% from 700 billion, or it's also estimating 700 billion in sales by 2025. This growth is driven by technological advancements in AI and machine learning, along with high-performance computing. In 2022, McKinsey also reported that semiconductors would become a $1 trillion industry by 2030, with growth potential in consumer electronics, automotive, industrial applications, EV, and IoT. However, supply chain disruptions continue to linger along with geopolitical tensions, but President Biden recently signed the CHIPS and Science Act, aiming to revitalize domestic manufacturing of chips, strengthening supply chains, and enhancing U.S. competitiveness in advanced technologies. So if we just look at the returns here on the quarterly, first quarter 2024, AMD experienced a slight revenue decrease of 2% year over year, and then continuing with an 11% drop quarter for quarter. AMD recorded modest increases year over year in gross margin and EBIT at 5% and 3% respectively. And then return on invested capital struggling between 0 and 5% on 4 consecutive quarters, with return on equity just below that. Consensus estimates are interesting. While 80% of analysts maintain at least a buy rating for AMD, 20% appear to be unsure of the buy position, and there are no sell ratings. The mean target price indicates a potential 12% upside from 166 to 187 US. Consensus also predicts an increase in revenue growth from negative in 2023 to about 13% in 2024 and significant growth in 2025. Gross margins are hovering around 50%, EBIT margins hovering between 21 and 33%. Analysts expect a gradual increase in net profit margin from 19% in 2023 to 30% in 2026. Let's look at its revenue structure. AMD introduced high performance and efficient solutions for AI cloud applications adopted by major companies like Meta. They also made advancements in data center AI, reporting $7 billion in 2023 revenues for the segment. AMD remained the top provider of game console chips, powering millions of Sony PlayStation and Microsoft Xbox consoles with $6 billion in segment revenue. However, both Sony and Microsoft are reporting slumping console sales. AMD acquired Xilinx, Mipsology, Node AI to strengthen their position as the leading provider of high-performance adaptive AI computing solutions. This allows expansion into more industries like medical, telecommunications, automotive, industrial, aerospace, and defense. As AI adoption continues to grow, these are the areas where embedded segment has opportunity. Major manufacturers like Acer, Asus, HP, and Lenovo have shipped millions of PCs powered by AMD, but sales have been choppy recently. The client segment reported just under $5 billion. If we look at the fundamentals, valuation, momentum, and risk, overall, AMD ranked lowest decile relative to 1,800 other non-financial companies. In terms of fundamentals and valuation, AMD ranked 80% lower versus others. And we can see that that's due to low margins and returns on assets and equity and falling asset turnover, all dropping from recent highs on the fundamentals. For the valuation side, it's just high multiples. On the momentum, AMD ranked below average. All recent measures are negative if you look at that last column under momentum, starting in 2022. And then the risk, the balance sheet is high. The balance sheet risk is high. And this is all bite signs that the company is within its debt capacity and is net cash. The price risk measured in terms of beta suggests more volatility and risk. If we look at profitability growth, we can see AMD had back-to-back rankings near lowest among 630 large information technology companies, a stark difference from the back-to-back top ranking 2 years prior. Profitability fell back-to-back, highest ranking to 8 and 9, the last two measures. Growth shows similar movements to the downside with similar weights, and this is all coming down from a strong performance in 2020. Asset efficiency fell from top 20% to bottom decile, pulling on profitability. And similar weaknesses are seen within expense control, falling from top performer to near worst, adding greater downward pressure on the profitability. Sales growth had a major slip recently from back-to-back top rankings. Expense direction saw some relief, rising from the lowest decile in back-to-back years to the bottom quartile, both negatively impacting growth. If we look at the income statement, we can see that revenue and EBIT are marginally low compared to their competitors, and I'll talk about this a little bit more in future slides. Inventories are my biggest concern. As I said before, inventories were in the 3-digit range prior to 2021, moved over to 2,000, 3,000, now 4,000. So there is some concern about whether they're able to sell. Looking at the liabilities and equity, I don't see anything to highlight on here. I really think that this is really a sales issue, a quantity issue, and I'll highlight in additional slides. Again, on the cash flow statement, nothing really to point out here. I have a free cash flow slide that I'll talk about soon. Ratios, again, EBIT margin and return on average assets. You can see in 2021, it dropped significantly in the 20s to single digits. Revenue per $100 of assets. Again, this is just looking at the same thing again. Significant drop from 2021 down to 60 in 2022, in the 30s in 2023. And I just don't see that really recovering until later on in 2026. So free cash flow, again, I'm going to highlight EBIT at the top there, but I'm really focused on that change of inventory. You can see it's just moving around, but not necessarily in the direction that I want to see. I'm a little bit perplexed about this chip shortage when NVIDIA yesterday just reported being the most valuable company yesterday. CapEx, I do expect that AMD will spend some money in order to try to promote the sales, but this is really based on its largest customers. And so based on this, I'm looking at free cash flow to the firm. Let's talk about relative valuation. On the forward 2024 price to book multiple, AMD looks cheap compared to the information technology sector in the US and the world. However, it looks expensive relative to its sector in Asia ex Japan. The forecast return on equity be less than 1% in 2024, significantly lower than the sector averages in Asia, globally, and the US. This results in AMD trading at a significant premium based on the 2024 price to book to ROE multiple. On the forward PE multiple, AMD trades at a significant premium to the information technology sector in the US, Asia ex Japan, and the world. Thus, AMD looks expensive on a PE basis. I expect its EPS growth to remain negative in 2024 due to that drop in the net margin. So, and that's again anticipated from lower sales. So thus the PEG is not meaningful here. In terms of valuation and target price, I assume a risk-free rate of 3.5%, a US market equity premium 6.5%. Notice that most of the value comes in the future as AMD needs time to grow in its new AI investment. AMD has been a high beta stock, so I assume a beta of 1.25, which is lower than its previous averages. I forecast capital structure of around 14% debt to total capital. This results in a weighted cost of capital and a discount rate of 10.5%. And this is using a high terminal growth of 4% using free cash flow to the firm. For the sensitivity analysis, I'll show on the next page. In the base case scenario, I anticipate sales growth at 10% over the next 4 years until 2028, resulting in a target price of $110 using the free cash flow to the firm valuation. In the lower scenario where the beta is 1.12 lower risk, the target price rises to about 120 US using free cash flow to the firm. And the higher beta where higher risk would result in a lower price of $100 US. And then here's those sensitivity analysis that I just talked about. Notice really quickly on the bottom, it doesn't jump to the 120s unless I lower the risk value beta or if I increase my terminal growth rate from 4% to 5%. Main risks. The big one is adoption of AMD's ecosystem. AMD is a smaller player in a highly competitive semiconductor industry. Intel's corporate dominance and aggressive tactics have presented the greatest risks to compete effectively, and I would add NVIDIA to that. Additional pressures come from the cyclical nature of the semiconductor industry, fluctuations in product demand, potential losses of significant customers like Microsoft or Sony, and intense competition. Disruption risk from heavy third-party reliance. AMD has heavy reliance on third parties, Microsoft, TSMC, Samsung, Intel, and others, for product manufacturing, securing essential equipment and materials, and utilizing competitive technologies, especially alongside its competitors. Any disruption or failure in these areas could have a significant impact on AMD. Of course, there's also geopolitical, economic, and supply chain risks. Demand for AMD products depends in part on market conditions, stemming from changes in demand. Exogenous pressures in the form of increased or sustained geopolitical discord, inflation, or impacts to AMD supply chain may adversely affect operations, negatively impacting margins. So that's my presentation. Just want to reiterate that I am initiating coverage on AMD with a sell recommendation based on the target price of 110 US, implying a 34% downside. Thank you very much.
Wow, well done indeed. We got some questions coming in, so I'm going to leave your presentation up there on the screen. So if you want to go to any place, you can.
Sure.
But feel free also just to, just share. So Moment's asking, why do you think the AMD was not able to benefit from the AI boom as NVIDIA did?
Yeah, that's when I started to really research this. I was really focused on two things. Number one, they kept mentioning chip shortage. Then I started to look at the inventory. And as I was looking at the inventory, and I'm just going to slide over to those areas. Let me go to the balance sheet real quick. I noticed that the inventories kept climbing, and it's not showing here, but well into 2018, 2019, 2020, the inventories were in the 3-digit range. They did have some acquisitions, but I don't see post-acquisitions that those inventories are flowing. And so that's my biggest concern, is that they're struggling to be able to sell because there's preference on brand loyalty to NVIDIA and other chip makers.
Now, I do notice if you go to your revenue forecast that you actually do turn kind of positive once we get out, further out. If I look at the net profit, you're up to 5.866 billion.
Yeah.
What's changing?
That, in my opinion, is the drag on the AI investment. Right now, as the prior presenter had shared, NVIDIA is really the hot topic right now. AMD is the lower topic. So if I could use a metaphor, it's Coke versus Shasta soda. And AMD is the Shasta soda, essentially. It's a good soda, but people just prefer Coke over Shasta. And in this case, people are preferring NVIDIA and other chip makers over AMD. However, the investment in AI, I think, is the drag that you see, where I have some hope and I'm optimistic in 26 and 27.
And if you can go to the equity section of the balance sheet, I think this is what's interesting about this story. We talked about this before, you and I, but I'm just curious if you've got any more thoughts. What we can see is in 2021, the paid up capital was about $11 billion. And in 2022, it went up to $58 billion.
Yes.
What happened there? Was it a good decision, a bad decision? What do you think about that particular item on the balance sheet?
I think this is where there's signs that they are struggling. They made these investments. They had garnered all of this extra inventory, and they had expanded their market to more than just graphics processors. They have, as I had mentioned before, so many other industries where AI is going to expand its
But
ecosystem.
before you get to that, what I'm just asking about is the raising of capital. Tell us about what they did in 2022 that caused it to go from 11 to 58 billion.
That's a good question. I really couldn't find anything within their reports. It seems to be kind of silent. It's more of just we have lots of acquisitions that we have taken on, and I really couldn't find anything on what the paid-up capital
Okay.
significant raise is.
I'm assuming that the company did maybe a rights issue and raise capital or some other type. If you can go back to the asset side of the balance sheet, what's interesting, and you've been talking about this, is the movement, particularly in goodwill, because goodwill is when you're paying more than the market or the fair value for a company. But both goodwill and intangibles have gone up massively, which is this
Yes.
investments in other companies. But if I look at the asset turnover and the revenue, you can see that they're just not getting the revenue out of it. Did they overpay? Were these investments bad investments that aren't going to produce revenue, or are they eventually going to pay off?
I think they're going to eventually pay off. It'll take time. The acquisition from Z-Links was completely by shares. So there's a lot on AMD's plate to try to figure out how to get some movement on their products.
Okay. We've got a question moment here. Do you think that AMD will shift from gaming to data centers as NVIDIA did?
They are in data centers. They, in fact, Dr. Su had promised about 4 billion in chips. I would like to see AMD really start to look at non-graphics, non-data center environments where, you know, as I'd mentioned at the very first slide, they've got chips in Mars. They've got chips in Teslas. They've got chips in 5G towers. So I think there's a huge opportunity there because NVIDIA has cornered the data center and the graphics chips market right now.
Can you go over your first page to answer
Sure.
some of the other questions? So here's a question that's a little bit of a rehash, but given the booming AI market and AMD's advancements in AI, what's the basis for recommending AMD as a sell? Could you elaborate on the key factors driving this assessment despite the positive trend? So maybe what is the key element that's just not working for AMD?
Revenue. They're not selling enough. That's the biggest thing. And then behind revenue is inventory. They're not pushing product fast enough.
Right. Another question coming in from Anuratia. It says, AMD enjoys certain tax benefits which have positively impacted its financial results. What is the outlook on the sustainability of these tax benefits? Are there any anticipated changes in tax policy that could affect AMD's future tax liabilities?
Yes, I did include that in the forecast. They've definitely enjoyed some tax benefits, and I think that's going to start to wear off. So that's priced into this estimation.
Okay. And back to Momin, he's saying, do you believe that with increasing competition, AMD would survive?
That's a good question. You know, the biggest problem here is they're not selling enough. Their inventories are starting to stack up. So I'm optimistic around the 2026 to 2027 area. I think it's really early still in terms of AI adoption. So as the market tries to figure out how they can include AI and machine learning and everything that requires these types of chips, I do see some potential for the upside, but it's going to take some time.
Okay. And I'm going to go to the last one. Hold on. Last one. AMD has a huge impact on the gaming industry currently. How do you think they'd fare if competitors like NVIDIA looked to increase their presence in this space?
Yes. So in AMD's biggest gaming partner is Sony at about 70% to 80% of their revenues. Sony has already indicated that they're not looking at new consoles until 2027, and they're reporting slumping sales. So I just don't really see very much in the gaming sector right now.
Okay, hold on one second. So we got some nice comments coming in here. Well done from Grace.
Thank you.
Yeah. And some other ones. And also from Mina. Great job. So how does it feel to graduate from the Valuation Masterclass Bootcamp?
Very good. I took a look at that accountability profile where we were capturing all of the hours that we were putting in the last 6 weeks, and I broke 200. So it was definitely a lot of work, but very, very good. Very happy about this.
And how would you describe the transformation that you went through?
My transformation was understanding speculation. So I'll give another metaphor. In physics, there was this discovery of the background radiation. Nobody knows about it unless you actually put the effort to actually recognize it. And so I would equate this whole process to that. I just really didn't understand speculation until I sat down and really put the work to understand this firm.
And how did you hear about Valuation Masterclass Bootcamp, and why did you decide to join?
Yeah, I spent many years, starting in 2018, within the trading channels, not understanding what trading channels were. And as I started to gain some understanding, I fell in love with this idea of value versus speculation. Ran into Ben Graham, Charlie Munger, Warren Buffett. So I started Googling. The Googling eventually led to the CFA. And then from the CFA, I ran into your program. And so that's how that began.
Awesome. Well, I want to congratulate you on a great job. I mean, that was a pretty flawless presentation too. At some points I was wondering if you were breathing or not, because you were just but I think it's, you know, I feel proud for the progress that you've made, and it's been fun to watch that happening day by day and step by step. And I would say, to me, you know, not just you, but also the other students that haven't presented live. We have a lot of people submitting their final presentations this week. But for everybody, the whole joy for me is to watch the transformation. You know, if you go back to week number 1, day number 1, like, you know, oh my God, there's all these things, and, you know, nobody really understands anything, to where you are today. For everybody in the Valuation Masterclass Bootcamp, that's why Momin and Super One and myself and Alex and all of us and Pete, we love doing this because we love seeing the transformation.
Agreed. Absolutely agree.
All right, I'm going to take you out of here, and then I'm going to talk to the audience for a couple of minutes, and then we'll see you in the Slack group. Yep. See ya.
Bye-bye.
Well, incredible. That was another great presentation. We had one by Roman, and now we've just had, so it was NVIDIA by Roman, and now we've had Hamid presenting AMD, and I just felt like that was a very comprehensive report. So if you want to learn about valuation and how to value a company and how to build a competitive advantage in valuation, I think it's a skill that is a core skill in the world of finance. And if you can build that skill, whether you're going to value companies or not in the future, if you decide you're going to be an investment banker, or you decide you're going to be an equity salesperson, or you decide that you're going to be, you know, a credit analyst or something, you still need to understand how to value companies. If you start companies, you need to understand. So check out valuationmasterclass.com, and there you'll learn all about the boot camp. And I hope to see you in the next boot camp, and to see you in the next video as we cover the next sectors in the boot camp. Have a great